IPO of the public sector enterprise, Indian Railway Finance Corporation, also known as IRFC, is open for subscription from today till January 20, 2021. The IPO subscription has been set at a price band between 25 rupees and 26 rupees per equity share. This is a combination of fresh issue of 118.8 crore shares and an offer for sale of 59.4 crore shares. Post-IPO, the Government of India's holding will drop about 85%. Now, should you subscribe to the IRFC IPO? Here are a few factors that could help you make the right decision. At the upper end of the price band of 26 rupees per share, IRFC is valued at 0.97 times the book value as on September 2020. This is slightly higher than other PSU financiers like REC and Power Finance, which trade at about 0.7 times of the book value. But IRFC is a safer bet by virtue of its direct dealings with the central government, with very low risk of defaults and payment delays. It is a central public sector enterprise or CPSE. As a result, the company has to pay a minimum annual dividend. The IRFC also experienced visible growth. As on September 2020, the assets under management consist of 55.34% of rolling stock assets, financing 42.41% of the project assets and others. The on-lending activities of IRFC operate on a cost-plus margin model. That means the loans are given out to the railways at the weighted average cost of incremental borrowings plus a certain pre-decided margin. This margin is determined by the Ministry of Railways in consultation with the IRFC at the end of each fiscal. Between financial year 18 and financial year 20, the disbursements of IRFC grew by 40% CAGR and stood at 71,392 crore rupees for financial year 20. For 6 months ended September 2020, the disbursements stood at 19,016 crore rupees as against 24,534 crore rupees in the year ago period. This could be due to the COVID-19 pandemic. The Ministry of Railways relationship enables IRFC to have a high-quality asset book, that is, without any bad loans. They also have a high capital adequacy ratio of 395%. But if the margins determined by the Ministry of Railways are lower, it may adversely impact the company's finances. Since the funding by IRFC comes as part of the internal and external budgetary resources of the Indian Railways, any policy stance by the centre to cut the internal and external budgetary resources funding by the ministries will have a significant impact. Privatization of the railway network, leading to a lower capex need, could also dampen prospects. Click the link in the description below for more details.